welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we'll open the floor for you to connect with our experts. But before that, let's have a look at what the markets are up to. So Cheryl, seems like the wait is just getting longer. As of now, the Nifty is mildly in the red.
Absolutely. A very good morning to you, Shrishti. And we've been waiting actually for Nifty to hit that record high levels. If you look at Nifty, it was only kissing distance is what you could see. Only 2 points away from those record high levels. That's about 15 to 20 minutes ago. That's the way how the market transpired. And there you go. From there on, you saw some sort of resistance creep in for the Nifty. And now we've inched lower. We are below or rather touching distance of 18,850 mark coming in for Nifty. Remember, this is the fourth consecutive session that Nifty is actually trading range bound shy of those record high levels for us. If you look at Nifty Bank right now, a tad bit of outperformance compared to the benchmark indices, still trading with a positive bias. Let's take a look at what the broader markets are doing, because remember, most part of outperformance has been coming from that particular segment. But for now, if you can see, mid cap is moving in tandem with the benchmarks. Small cap is outperforming with gains of about 0.2%. Let's talk about individual stocks, the ones that are ruling the charts. So you have Aishu Motors, HDFC Life, Divi's Laboratories, Hero MotoCorp, all of them seeing good gains in trade today. Add to that list, you also have BPCL that's seeing an uptick. But on the losing front, it is Tata Steel, Infosys, Bajaj Finance, Power Grid as well as Tata Consumer that are declining in trade. Let's take a look at what IDFC First Bank is doing in today's trading session, because CLSA has come out with a downgrade on that particular counter. So you have IDFC First Bank there. It's knocked out in the trade, 4% downtick coming in for IDFC First Bank. On the other hand, let's take a look at what JSW Energy is doing in trade today, because that one has got a double upgrade coming in from Antique. Remember, yesterday's stock saw an uptick of about 6%. Right now, it's trading higher by approximately 3% in trade today. A slew of brokerage reports as well. You have Delivery, that you saw a big block deal take place in that particular counter. You have Sincera Engineering as well. That one also saw a block deal take place in today's trading session. So both of these counters are in focus. But for now, Shrishti, the market, yes, we are shy from those record high levels. It's just like being range bound for the Nifty, testing all of our patience, isn't it? But IT sector is where everyone is focused now on.
Well, yes, absolutely, Cheryl, because there are a lot of news flow that is coming on the IT. We have TCS, which has got a large deal win order. Other than that, Wipro is in focus as the buyback opens today, as well as Exchanger Q3 results. What to be watched out for, that is also in focus. We will touch on all of these topics one by one. But firstly, let's start with TCS. That has won a deal from UK-based Nest to digitally transform its scheme administration services. Now, Sharad is here with all the details of the deal. Take it away, Sharad.
Well, yes, deal-specific focus would be there in the IT industry as TCS has won back its contract from Nest. Now, to give the perspective, TCS has been working with Nest since 2011 itself, and over the next 10 years from 2011, they have been working on scaling up the operations and increasing the subscriber base to roughly almost 10 million people. Now, in 2021 itself, the contract went to Atos, but after 1.5 years of an 18-year contract, that was given back to TCS. Now the TCS has submitted its bid again and has actually won the contract back. Looking at the contract details itself, the commitment is for 10 years with the extension of another 8 years. The contract value is expected to be for almost 840 million pounds, and if there is an extension, this would be 1.5 billion pounds. Now, apart from this also, this is a deal win, the company has stated, and it's not a renewal of contract, and they are expecting additional sales coming in. Now, what the analysts have been stating on this deal is that TCS order book, even if you take it out without the BSNL part of it, it's expected to be very strong and drive additional sales in the first quarter of FY24.
All right, thank you so much for that, Sharath, for talking about the TCS deal win. Remember, there's a lot of news surrounding the IT sector. Like Shrishti said, you also have the Wipro buyback. You have Accenture that will report its number. Today, you have Morgan Stanley that's actually come out with a note on the IT sector, where they believe that the near-term outlook is pretty tough for the IT space, and they've gone ahead and trimmed their estimates as well as they've adjusted the target price. They've said that after a challenging first quarter of CY 2023, they are expecting a muted Q2 as well coming in for the sector, that is Q2 CY 23. But my colleague Anisha is here to tell us what she's making of this particular statement, as well as how are we expecting Accenture to perform in the quarter gone by. Anisha, Morgan Stanley definitely putting it out there very clearly that the near-term outlook seems to be tough. What are Accenture estimates saying?
No, well, yes, I really don't know where to begin because there are so many moving parts with respect to IT at this point of time. But I'll just take it from where you really left with respect to Morgan Stanley. The interesting bit there, not only the fact that Q1 is going to be weak, they're talking about further trimming coming in as far as Q2 is concerned. And that tells you that perhaps the pace of downgrades for IT sector is not done yet. We have seen massive downgrades in the last 3 months itself. The target prices have been cut anywhere between 5 to 25%. Of course, Infosys was the lead laggard there. But going forward as well, they are saying there is likely to be more headwinds. However, from Accenture, the expectation is fairly muted. If you look at the stock performance of Accenture over the last 5 days, it's been on the back foot, telling you that the street is expecting a bit of a muted number to come by. They had guided for a 3 to 7% growth in terms of the ask rate for Q3. The street is working that the actual number is going to be 4 to 5%. Having said that, do remember that the company has managed to surprise the street 3 out of the last 4 times. So there's that definite upside risk as well, because bookings have been strong, outsourcing business has been doing well. It's only consulting which is on the back foot, so we'll watch out for the commentary on that. And overall, if there's any other further trim coming in on the guidance in the quarter gone by, the upward limit of the guidance was trimmed down. Is there any revision on the guidance this time around is important to watch as far as Accenture is concerned, but very important to track the commentary on outsourcing as well as consulting, and any word on generative AI as well. Quickly shifting focus to Wipro as well, because back home that's the stock in focus. The buyback opens today. We already know that there's a 12,000 crore buyback. The real shareholder acceptance ratio is around 23%. That means that if you tender in 100 share, minimum 23 will be accepted. There's a lot of chatter with what the acceptance ratio finally will be. There's ICICI saying it could be as high as 60%. IFL believes the acceptance ratio can be 40%. And we did some analysis with respect to the various scenarios of what the acceptance ratio could be and what could be the net profit. That toggles anywhere between 3 to 10%. So there's not a big upside that you can make on Wipro. But we have seen historically, every time Wipro does a buyback, in the next 9 to 18 months, there's a downtick on the stock from anywhere between 3 to 20%. That's likely to happen again this time, because the focus will now shift back to fundamentals, which aren't very strong for Wipro. So a lot of moving parts for IT. The Morgan Stanley note, which has actually downgraded Cyient. There was a cut coming in the IPO size of Cyient as well today. And then the news on TCS, Wipro, as well as what's happening with respect to Accenture earnings estimates. Back to you guys.
Right. Thank you so much for that, Anisha. And actually, I stand corrected the Morgan Stanley note that they did mention. They said the near-term outlook, especially in the Q1, is the one that is going to be tough, and that's Q1 FY24. I stand corrected on that particular front. But thank you so much, Anisha, for putting all of these moving parts into context for us to tell us exactly what is happening in the IT sector. But now also let's listen in to a take coming in from etnow and etnow Swadesh's managing editor, Nikunj Dalmia, on the entire IT pack, what he makes of the move over there.
Temptation to buy IT, I think, is there, and the reason why the temptation to buy IT is there is because the gap between where the markets are and where IT is, I think, is very large. And when the small cap index is nearing an all-time high, when the Nifty is at an all-time high, with the exception of 4-5 heavyweights, pretty much the entire market, good quality names at an all-time high, you say, okay, what is left? And what has not participated, I think, is IT. But should you really be buying IT? Let's understand the scenario. I would say that just because consumer stocks globally, just because you've got a rally in AI stocks and Nasdaq and Microsoft and Nvidia, should you buy TCS, Infosys, Wipro? No, sir. That's a completely different. That's a completely different kettle of fish, if I may use that word. These stocks will do well only when the business environment improves. What is the business Kahoot for some of these companies? It is banking, it is finance, manufacturing sector, and retail. I don't think those sectors in US are in bull run. I don't think those sectors in America, in Europe are in bull run. So I think IT is going to be a play only when you see real recovery coming back in the sector. The valuations are not that attractive that you want to be in contra buyer. So the way I see IT moving is that you will see actually some engineering-based IT companies will start doing well. So you got Tata Elxsi, we'll talk about names some other time, but as a theme, mid-cap IT, and within that, manufacturing stroke design capability IT companies have a scope to go higher.
Okay, that's the take coming in from etnow's managing editor, that mid-cap IT and and maybe very select IT names catering to select sectors could perform well going ahead, and the outlook is still not that bullish. But let's understand from our experts onto the show what is their outlook on the IT sector. Onto the technical front, we have Kunal Bothra as always, and for fundamental take, we have Neha, Assistant Vice President Research at Motilal Oswal. Very good morning to both of you and welcome on ET Now. Kunal, firstly coming to you because the last week wasn't great for IT, but this particular week, a lot of IT stocks have shown resilience, be it HCL Tech, TechM, and even TCS has shown some good up move like yesterday. So what's the technical charts looking like for all of these counters? Will you be a buyer at this point in time?
So, good morning first of all. The theme that the IT sector overall is underperforming is purely because of the fact that large cap stocks in the likes of TCS, Infosys, Wipro, specifically these three names have been huge underperformers. Now, it's always better to try and trade momentum, and we've seen this in 2020 post-COVID rally where the mid-cap IT stocks outperformed the large-cap IT names by leaps and bounds in terms of the percentage gains for many of these mid-cap IT names. So I believe that we are back into a very similar kind of a phenomena where the mid-cap IT stocks can continue to outperform the large-cap IT stocks. But I also believe that the likes of TCS, HCL Tech, etc., these stocks could also be forming a formidable bottom for themselves over the very near term. So the view is not bearish on the large cap IT names, but it's just that possibly the mid cap IT stocks would tend to give more strong returns over the near to medium term before the large cap IT stock starts to get into a rally mode.
All right, so that's the take coming in from Kunal. A very good morning to you, Kunal. Good morning to you as well, Neha. And we had Anisha actually outline what even Morgan Stanley was saying about the entire IT space. Near-term outlook looks tough for them. Also, the fact that there has been cut in the discretionary spends globally, that's also impacting the IT sector. Do you think, despite all of this, the entire outlook of the IT sector will start improving from Q2 onwards? One can start looking at investing in these counters at these levels?
Very good morning. So as you mentioned, the near-term growth is actually seeing signs of fatigue because of the global macro factors. The large enterprises are continuously facing pressure in terms of tech spending. In fact, they are actually they are focusing more on the cost optimization front, and you're seeing a lot of churning at the senior level as well. So the overall environment remains very cautionary, and thus for at least next 2 to 3 quarters, the demand would definitely remain weak. Probably things would start turning around, say from Q onwards or from start of FY25. So we believe that in the near term, the pressure would definitely be there. The stock would be under pressure. So probably one can very selectively buy into these stocks in a staggered fashion whenever there is a fall coming in. But the overall long-term view remains really constructive, and if an investor is a long-term investor with a view of 3 to 5 years, then definitely he should take he should actually grab this opportunity to buy at lower levels. So that's our view. Is near-term pressure would be there, but then long-term view is positive.
So near-term pressure could be there, but long-term view is positive. That's the view coming in. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back, and then we'll start taking all your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us live. The number will flash on the top of your screen. You can write to us, write your name, also the stock that you're looking to invest in. If you've already invested in the stock, then do mention the buy price, the quantity, as well as the time horizon that you're looking to hold a particular counter, because that will help our experts help you better. But remember that you can only write to us on the WhatsApp number. Please do not call on the number. We will not be able to take your call. With that, let me kickstart with the queries then. And the first query that I have is coming in from Pradeep. He had written to us from Kolkata, but I believe I kind of have lost his message actually to us. Shrishti, I will request you to take it.
Okay, so moving on with the first query, and this one is coming from Mr. P.R. Reddy from Hyderabad, and he's holding shares of Chumble Fertilizers, 300 shares at a price of 291 rupees. Sneha, how is this particular counter looking to you? Because all these fertilizer stocks have been buzzing off late, and Mr. Reddy is still not in profits right now. So should he continue to hold on or exit at this point in time?
Yeah, he can continue to hold for another month or two because these stocks would be in flavor till the monsoon season. Like he can continue in the near term, but then post that he should definitely exit because these are more of flavored stocks which are in flavor during at the start of the like they continue to be in flavor with the onset of monsoon, and post that they really tend to cool off.
Okay, this one is coming in from TP Vinod from Salem. Kunal, this one is for you. He's holding Polyplex. 1325 is the buy price. Aavas Financiers, 1800 is the buy price for that one. He wants to know whether he should book out, hold or average, and also if you could give some target and stop loss for these counters.
Well, for Aavas financials, I think you can maybe continue to hold on, but keep a stop loss of 1350 approximately. So 1340 could be a better stop loss for Aavas Financial. You can continue to hold on till the time the stock is trading above those levels. And even for Polyplex, I think the stock is going through a very subdued kind of a trend, neither a major correction or nor a very strong revival or a rally for the stock price. It's been a bit more listless as well as consolidative. The stock has been trading at its 50-day moving average, I think, for the last 1.5 to 2 months. So that itself indicates that the trends have been very, very subtle for Polyplex. I would suggest that maybe keep a stop loss of 1280 mark if you're a positional trader, and then continue to hold on.
Okay, moving on, and Kunal, once again coming to you, this question is on ABFRL. Imtiaz from Kolkata is holding 500 shares at a price of 199 rupees. Should he continue to hold on or sell at this point in time, or rather book profits? And if you are saying that to ride on, then what target price should he be expecting?
See, I think you can continue to hold on to it from a long-term play, but if you have entered at a right price and you're looking to play it from a short-term angle, then I think booking out profits at current levels of 215 to 16 could be a good strategy, and then wait out for a point where the stock may go back below the 200 mark. Generally, these kind of stocks, they tend to form a double bottom on the medium-term time scale before they establish a major bottom for themselves. So I think you can probably play with a short-term kind of an angle, book at current levels of 215 to 16, and then look to buybacks up to 100 mark.
Okay, this query is coming in from Akshay. This one is for you, Sneha. I'm unsure if you track this counter known as Shivalik Bimetals. He's saying that he has 1,500 shares at 535, and apart from that, he also has Vare Renewables, 1,000 shares at 800 rupees per share. He wants to know what should he do with both the counters. Should he stay put with them?
Extremely sorry, I don't look into these counters.
Okay, Kunal, I don't think you look into Shivalik, but Vare Renewables, have you ever seen a chart of this particular counter?
Not really, Cheryl.
Okay, fine. Shristi, you can.
Okay, moving on, and Kunal, coming to you for next one. Kamal wants to know your inputs on two IT names. Firstly is Persistent System and the other one is Coforge. At this point in time, can he enter any of these names with the next 3 to 6 months of investment horizon?
Well, I think we should wait out for say another at least a couple of months before you start investing into these these two names specifically, because both Coforge as well as Persistent, they have established a near-term top for themselves on an individual basis. So Coforge, for example, I think at 4600, 4660 mark seems to be facing a lot of resistance, and I think that's where the stock seems to have formed a double or a triple top for itself. So which means that maybe some more time correction or a consolidation could be in line for Coforge, and similar is the case with Persistent. I think almost 2 or 3 weeks back, there was a sharp selling which had impacted the stock price, and it's been unable to lift off post that sharp selling pressure, which means that the stock could be due for more correction / consolidation. So I think you should wait out for at least another 1 to 1.5 odd months before you look to buy back on dips.
All right, moving on. This one comes from Vamsi. She's writing to us from Mumbai, and she has Healthcare Global, 1,000 shares, bought at 280 rupees per share. She purchased this counter with a long-term view, and also is continuing to hold it for the next 2 years. But do you think fundamentally it makes sense for her to do that, Sneha? She wants to know on the fundamental side, does it make sense to stay put with this counter for the next 2 to 3 years?
Yeah, definitely she can stay put into this counter. There's a lot of interest in the hospitality segment, and that is because these companies have been able to like maintain their demand outlook. If you see their post COVID, it was expected probably that the demand would dip, but then the demand continues to be strong, and these hospital companies have been continuously optimizing their cost. So, with the optimization of the cost and with the demand remaining strong, their profitability outlook remains pretty robust. And with the kind of lifestyle diseases that is on a rise, so the stocks would continue to remain in favor. So, definitely a hold.
Okay, that's a hold coming in on Healthcare Global. But Kunal, coming to you for next one. This question is from Satya Venia, and he says that he's a huge fan of yours and wants your advice on two names. Firstly is NCC and the other one is BEL. Can he enter any of these names at this point in time, and what's the outlook going ahead?
Thank you so much for that. So, I would suggest that for NCC, you can look to book out profits. In fact, it's in a zone where the stock seems to be facing a lot of resistance. I think at 120-25 range, the stock is at a point where the risk reward may not be in extreme favor to initiate a buy. So I would actually wait out for the correction of NCC. I think over the last 1.5 odd month, if I'm not wrong, the stock had corrected towards 100-104 mark before it rallied back towards 120 plus level. So I think if it's a similar correction, maybe closer to 110 this time around, that could be a better level to buy NCC. And for BEL, I think current levels could be a good starting point, but then have a two-pronged strategy where you may start buying at current levels of 120 plus for BEL and then keep some powder dry in case if the stock corrects towards 115, look to average further.
Moving on, this one has come from Hemant and he's holding 430 shares of Paradeep Phosphates Kunal at a price of around 45.26. He wants to know what's the short to medium term outlook and at what price can he add some more of this particular counter in his portfolio.
I've been bullish on the stock since the last, I think, 4 to 5 months, of course, with the limited history of the stock price. But then, it's just very recently, I think the last 1 to 2 weeks is where the stock has picked up pace, formed a bullish flag pattern, broken out of 200-day moving average, shown very good volumes today as well. So I would suggest that it's a good stock to hold on to. If you have a time frame of at least 6 months or more, then I think it makes sense to hold on to the stock for a target of at least 70 to 75.
Okay, moving on. And Kunal, the next question is on Adani Ports. Venkat Rao is holding 200 shares, but at a price of 845 rupees. The stock is showing some bit of an up move in the recent past. So going ahead, do you believe that 845, can he expect those targets coming in?
See, for such kind of stocks, it is always better that you start averaging out whenever you are 15% to 20% on average lower than the purchase price or the cost price of the stock price, because stocks like Adani Ports and many of the other large cap names traditionally, they are low to moderate beta stocks and they would probably move in a very gradual manner on the upsides. For example, look at it this way, that Adani Ports, after so many weeks of correction, news flow, etc., has managed to come back towards its 200 moving average. I think it's just about 3-4 points away from its 200 DMA, and this has come back after almost 4 or 5 months of being trading below those levels. So that's the classic nature of stocks like Adani Ports. I would suggest that use corrections to average out further and lower your cost price.
Okay, this one is coming in from Vidya, writing to us from Chennai. Kunal, another one your way. Short-term trader holding Balrampur, Chini at an average price of 400 rupees per share. She's thinking about booking profits right now. Do you think that's the right move or the uptrend will continue?
See, spot-wise, I think it's looking attractive because it's forming a bullish flag pattern on the daily charts. And the nearest swing targets for Balrampur Chini would actually be closer to 425, 428 mark. And today the stock has come out of a resistance, a swing breakout. So all of that is positive for Balrampur Chini. I would suggest 425, 428 could be a better price to book Balrampur Chini.
Okay, Kunal, sorry, but coming once again to you, this question is from Krishna Kumar, and he wants your advice on TCS because this counter was on your radar recently, and Krishna Kumar is holding 60 shares of TCS at a price of 3,308 rupees. So going ahead, what sort of a targets he should be looking at, and he can hold for long term. So what would be the advice for the same?
See, I think you can continue to hold on. As I said earlier, that possibly these large cap IT names would get into a zone where there could be more of consolidation rather than any flurry of price action. So it all depends now that you're trying to buy a large cap IT stock at the midst of extreme negative news flow. The news flow could be a negative for these stocks for maybe another few weeks or another couple of months. But then when the tide would turn, these stocks would start to outperform, like what we've seen in 2020 and over the last 2 decades for 2 decades and more for TCS. So I would believe that it's a good start, that if you've started to buy the large cap IT names, use dips as a good strategy to average further. Maybe 3,200, 3,100. These could be points where you may look to average further in case if the stock dips to those points.
All right, the next one is coming your way. Neha, we did speak about the IT sector at length at the start of the show, but you have Ms. Ramakrishna Rao, who's holding Mastech 200 shares at a price of 3,265 rupees per share, wants to know whether to continue to hold on to Mastech or go ahead and book losses and look at some other counter altogether, because if you look at the buy price, it's 3,265 rupees per share. I'm unsure if there was a stock activity in between, but yes, it is more than half from where she's bought it.
Okay. I'm extremely sorry, I don't cover Mastech, but in midcap IT, I would suggest probably LTTS that she can look at, because these are the counters wherein probably the recovery would be a little faster. And LTTS of late has been in news, wherein with Indigo placing a large order with Airbus. So LTTS actually won an order recently from Airbus in March, and it's anticipated that probably they would emerge as the like they can get the order from the Airbus this time as well. So LTTS is one counter which we are liking at the current levels among the midcap IT names.
Okay, so that's the view coming in on a couple of IT counters. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back. You're tuned into Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And continuing the same, the next question, Kunal, coming to you. This question is from Ajay from Trivandrum, and he wants your advice on two counters, Subros as well as Aether Industries. At this point in time, can he enter any of these names, and what sort of a return expectation he should be looking at?
So I think both these stocks, Subros as well as Aether, they have moved up significantly higher in the last 2 or 3 days. I think Aether from 1,000 rupees to now 1,200 in just the last 2 days. And when you look at it over the last maybe a month, the stock has moved up from 900 to 1,200 odd mark, which is a significant jump in the stock price trends. And these are the kind of trends which generally sustain and the stock gets into a corrective phase. Even the same case for Subros. So I think over the last 1 week, the stock has recovered from 350 to 500, and it's now currently seeing a bit of a correction. So I would suggest to wait out for a dip, at least a further 10 to 15% correction before you look to buy back or look to buy these stocks on dips.
Okay, Kunal, this one is from Sushila, who's writing to us from Karnataka, and she has Motherson Sumi in her portfolio. She's not mentioned the buy price, but she wants to know what sort of target can she look at for this one in the near term, Samil, that is?
See, I would be extremely bullish on Badnam Motherson. I think I've been recommending the stock earlier from much lower levels. I would still believe that at 85, 86 levels, the stock has just restarted its uptrend. There could be a meaningful uptrend which could still be intact for the stock over the medium term. All you have to do now is possibly that if you've bought at lower levels, that you have to extend your time frame. So from being short term oriented, you have to now look out for at least 9 months to 12 months as a minimum time frame for the stock to try and carry forward the trend which it has restarted over the last 3-4 months.
Okay, so that's the take on Badnam Motherson. Moving on, and the next question is on IRCTC and Neha. Coming to you for this one, Bharadwaj from Coimbatore is holding 220 shares at a price of 590 rupees. Two questions: can he add more at current market price? And if yes, then going ahead, what sort of a target he should be looking at? He can hold this name for the next 2 to 3 years.
Okay, first of all, we don't cover the stock, but then definitely one can hold on to IRCTC. I won't be able to give you the levels, but then yeah, the outlook remains quite positive. We are seeing a huge amount of capex that is happening on the railway segment. And given the kind of portfolio that IRCTC has, apart from the ticketing, it is also looking at various non-ticketing revenue side as well. So it is trying to de-risk its business model, and it has been quite successful in scaling up the non-ticketing business as well. So we are quite bullish on their overall business model, and from a long-term perspective, one can definitely hold on to this stock.
This one is coming from Dr. Gopesh, who's writing to us from Thrissur. And Kunal, this one is for you because he wants only your advice. He's holding IDBI Bank around 9,000 shares at the price of 54.8 rupees per share. He wants a near-term target for this particular counter based on charts. We know a lot of news flow surrounding this one. We also know yesterday you had commentary where the Finmin official did say that they are going to go ahead with the IDBI Bank, a divestment. By December, they aim to conclude it. A lot of news flow impacting this stock. But on the charts, can you clearly see where this one is headed?
See, that's the point. With so much of news flow, there are two things which has happened for IDBI Bank. One is that the stock is not crumbled under selling pressure or under any kind of a negativity as such. Over the last 6 or 8 months, the stock has been consistently making pattern of higher highs and higher lows. In fact, the most recent low was almost exactly at the 200 moving average, where the stock bottomed out at 44, 45 levels and then restarted its uptrend to come back towards, I think, 58, 59, the recent high for IDBI Bank. But then, on the medium term charts, the stock has not done exceptionally well. So I think it's been just consolidating when you look at it from that angle. But I believe that if the stock price reaction is not negative going into so much of news flow, it generally means that maybe with some kind of an event or a catalyst, the stock would break.
From Goa wants to know 2 months target or 2 months outlook rather on IndusInd Bank. He's currently holding the stocks at a price of 1287 rupees.
So I would be bullish on IndusInd Bank. In fact, I would believe that if you can probably extend your time horizon from 2 months to beyond that, I think that could be a classical potential up move for IndusInd Bank. The stock, I remember, I think in 2022 second half traded, I think, at closer to 1200, 1250 mark. It spent almost 4-5 months at those levels, fell down, corrected back towards, I think, 1000 odd mark, and then recovered back towards 1300 levels. So the stock has this odd tendency of going into a time-wise correction, then a price-wise correction, and then a breakout or a rally. So I think in that regards, maybe the 2-month time frame may not be apt for a stock like IndusInd Bank. Otherwise, it's a classic buy.
All right, this next one that I have is coming in from Ramamurthy, writing to us from Bahrain, Kunal, and he has 32% profits that he's made on ABB. He wants to know what should he do, what's the outlook for ABB and LNT going ahead, and also on the other hand, even Cochin Shipyard, he's making profits about 30%. So should he book profits on that one?
Well, I would believe that it's a good strategy to book out profits over here. At least a 50% profit, if not exiting the entire stocks. The only reason for this for them is that the market moves in cycles and phases. In the last 3 or 6 months, or maybe in the last 1 year, for many of these stocks, we've seen a good phase shaping up for these stocks where they've been in the thick of news flow, positive news flow. The price action has been very good. These stocks have been consistently making new highs. But then it's a matter of time when the phase shifts towards the other stocks that these stocks may go into a time-wise correction or a price-wise correction. So I think it's a good strategy that if you've made handsome amount of profits into these names, book out and then look to buy back if these stocks correct by a margin of 10 to 15%.
Okay, Neha, coming to you for next one. The question is on Ujjivan Small Finance Bank. KB Rao from Hyderabad is holding 4,000 shares at a price of 37 rupees at a mild profits right now. But going ahead, what is the outlook on this particular name? He's a long-term investor.
Okay. So, Ujjivan Small Finance Bank can be held for a long term because the bank has made a lot of strides and improved its overall financials. The asset quality has improved tremendously. And in case of Small Finance Bank, the outlook remains pretty strong, especially with the rural recovery that has started off. So, this space should do well. So, definitely a hold at this level.
Alright, so that's the take coming in on Ujjivan Small Finance Bank. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Back here watching Buy Now, Sell Now on ET Now, and let's continue taking the queries. This one is coming from Anand N from Gurgaon. Kunal, 300 shares of Godrej properties at a price of 1,260 rupees per share. He is already making a gain of approximately 20%. He wants to know whether he should go ahead and book partial or complete profit in this one. He's a medium-term investor.
So, partial profits could be a good strategy for Godrej Properties. I would still be very bullish on the real estate pack on the medium to long term. I would believe that most of these real estate stocks are actually showing signs of a major turnaround on the monthly and the quarterly charts, which of course would probably get reflected in the next 4 to 5 quarters. That could be 12 months plus for these stocks. So, booking out 50% profits at current levels could actually be a good strategy rather than booking out the entire gains.
Okay, Kunal, Guru wants to know a technical view on Jubilant Pharmova. He is holding shares at a price of 480 rupees with 80 shares in the quantity. How is the stock looking like technically?
See, the only point of positive for Jubilant Pharmova is that the stock has formed a major bottom, or rather it's retested the previous lows. I think in 2020, the previous major low for Jubilant Pharmova was around 250 to 80 mark. The recent low, I think at the start of the year 2023, was around 280 approximately for Jubilant Pharmova, and the stock has rallied towards 400 mark. So the only point of concern is positivity is that 250 to 80 seems to be a major support, and the stock consistently sees a demand for itself. But then I think a better level to buy the stock should be closer to that 300 levels. Maybe 280, 300 could be a better level if you can sit at current levels, and in case if there is any opportunity of correction, look to buy back sub 300 mark.
Okay, this one is coming to you, Sneha. Alvin Pinto has written to us from Mumbai and he's looking forward to buy Grasim for the long term. He wants to know whether this one makes sense to buy for the longer term, how are the fundamentals, or is there any other company that you will advise him to buy right now?
Okay, Grasim he can buy into because it's the company is doing capacity expansion both in the chemical segment and the VSF segment, and we expecting a decent kind of numbers for the company. In fact, the company has also announced like huge capex in the paint side as well. It can emerge as a leading player in that segment. So one can definitely look into Grasim, but if like in the cement pack, our favorite among the large cap remains Ultratech. While in the mid cap space, we prefer JK Cement or Adani.
Neha, what's your view on Federal Bank? One of our viewers is holding shares of Federal Bank. His name is Thomas and he's holding 500 shares at a price of 134 rupees. He can still hold this name for the next 6 months. So at this point, is that a hold or sell?
Okay, so Federal Bank is one of our favorite stocks among the mid-size banks, as the bank has been continuously reporting a very healthy kind of momentum in its loan growth, and continuously it has been improving its asset quality. Its return ratios, if you look at, it's pretty healthy, and thus we are like really positive from a long-term perspective. It's a slow-moving counter, but then definitely a great buy.
With that, let's kickstart with the rapid fire then. The first one is coming in from Pratiksha from Muscat. Kunal, can she buy Ambuja Cements at current price for a period of 2 years? What's the right price to enter?
Yeah, I think current price is good enough for Ambuja Cements to enter.
Okay, Sneha Sudhir from Kochi is holding shares of GNFC, 200 shares at a price of 670 rupees. What to do with this one? He can hold for the next 3 years.
GNFC is a good stock, but then these stocks just trade in momentum for a few months. So probably post 1 to 2 months, he can book profit and then re-enter again post a little dip.
Okay, this one is coming from Poonam Anand about excess of 1,100 shares of Ease My Trip at 46 rupees per share. Kunal, what should she do?
I think we should look to exit.
Okay, Sneha, how are the long-term prospects looking like for Pricol? Can Priya from Bangalore enter at current levels?
No view on Pricol, sorry.
Okay, Kunal, Rima wants to know about Deepak Nitride, average price 1757 rupees per share. Right time to exit this particular counter, making healthy profits.
If you're a long-term investor, then definitely stay put.
Okay, Sneha Mohan Iyer has bought 400 shares of SAIL at a price of 116 rupees. What to do with this one?
SAIL, he can hold it for a long-term perspective, but in the near to medium term, the stock would remain under pressure.
Okay, this one is from Swati. IDFC First Bank making about 30% profit. So the strategy of 50% selling applies to this bank as well, Kunal, or should she add some more at this price?
I think 50% profit booking at current levels and then buy back on dips, maybe close to the 70-72 mark.
Okay, Kunal, Indu wants to know entry levels for PFC for positional trade.
I think 196 could be a better level if you're looking to enter the stock.
Okay, Kunal, Raghu from Chennai wants to know about Clean Science. Is it good to enter right now? As in, add some more. He has 100 shares at the price of 1,500 rupees per share.
Yeah, till the time the stock is trading about 1280 mark, you can continue to maybe buy the dips or hold on.
Okay, Kunal, Ashwin wants to know the entry price for Tata Elxsi for long-term investment.
So I think 7,400, 500, which is the 200 DMA, is a good price to enter Tata Elxsi.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Neha, for joining us on the show, giving your perspective on the IT sector, also resolving all of our viewer queries. And viewers, with that, it's a wrap on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But stay tuned, Markets at Noon is coming up next.